hit another record high. Went up another 100 points today, and and the stock market sort of reaching all these record highs over and over and over again is not a normal thing. I mean, this is just great, and I'll tell you another reason that there's good news on the horizon right now for investors is that the infrastructure bill just got passed, or it's on its way to being passed, and it's that's another $1 trillion they're pumping into the economy. So whenever they start pumping money into the economy, corporations are able to get their piece of that money. They always do, and that's just what it is. And that's why financial literacy is so important. Because if you have financial literacy, you know where to position yourself to get your piece. No government entity is going to save you from competition. Nobody's going to protect you from the fact that the smartest people are the ones who get the most money, and those who are prepared are the ones who get the most money. When you're not prepared, you don't get those opportunities. So just a reminder, the reason you can't see me is because my Wi-Fi here isn't that strong. So I'm going to go ahead and just do audio. That way you're not distracted by my extraordinarily handsome face. So I don't want to blind anybody. Any of the ladies, I know y'all might go crazy if you see how handsome I am today. So I'm going to leave my audio instead of my video so we can focus on the stocks. All right. So anyway, I'm playing. All right. So let me just jump in. I'm gonna answer your questions that you submitted, and also, in class, remind me, I'll mention a couple of stocks that I really like. And also, if you log in at the blackstockmarketprogram.com, you can actually see a list of stocks I just put for you guys right there in the curricula that I really like for this week. I did some research and found some companies that some of which I'm going to invest in. Sometimes I can't invest as much as I want because, my capital is all tied up. Just as a general rule of investing, people that build wealth tend to be people that have their money working for them at all times or as much as possible. So, people that have money don't typically have cash just sitting around. So when you see, like when you see a rapper just sitting there with a big pocket full of money and, he says, I carry $100,000 around just in case. That's very, very bad investing because your money is supposed to be working for you. Your money is an asset. It's capital. Capital is supposed to generate more money. It's supposed to bring back friends. And so when your money's not, invested somewhere, then you're not actually getting the maximal benefit from the money that's there. It's like a woman marrying a man who doesn't want to go to work, right? He's a strong, healthy man. He's real smart, but he just says, I don't think I want to work. I think I want to stay at home and lay on the couch. So I don't know about y'all ladies, but I don't think my woman would like that. I don't think she'd want me as an able-bodied black man to be sitting at home on the couch doing nothing because I am capital. In general, I'm an asset for her. She's an asset for me. And assets are supposed to generate a return, right? So ultimately, with your money, it's the same thing. Your money is it's just like having a spouse sometimes. If you have enough of it and you can put it to work and it can bring in income, and that's how you sustain yourself. Okay. So with that said, let me jump back in and start answering some of your questions. The first one I see is from Terrence Williams. By the way, if you want to know where I'm getting these questions, if you log in at the blackstockmarketprogram.com, you can actually leave your questions for me in advance. Those are the questions I answer first every Tuesday at 11 a.m. Eastern. That's when we do it. Some of you guys are new. So just log in at the blackstockmarketprogram.com and you can leave your questions and I'll answer them every Tuesday. And then I put the recordings in the blackstockmarketprogram.com so you can actually watch the lectures that you might have missed. And if you're wondering why you don't see my face, for those who just came in, it's because the Wi-Fi is not that good. So I just want to do audio today so you guys can hear me. All right. So Terrence asks, he says, E-Trade notified me that I do not have a beneficiary. Can I attach my account to a trust or annuity and add the names of those that will periodically get a dividend check? Yeah, you can. I would talk to an attorney about that. When Alicia and I, especially even before we got married, I took the time to go down and talk to a lawyer in Chicago about sort of making a death plan, not because I plan to die anytime soon, but because that's just kind of what you're supposed to do when you're the head of a household. You want to ask yourself, if I die, what's going to happen immediately? Like immediately, what's going to happen when I die? Meaning that, if you are the primary breadwinner in your household and you died tomorrow, well, that means that your partner would not be able to even pay the rent or the mortgage because they might have to get it to your bank account. Like, what if you got a paycheck coming in and they don't have, proper documentation or paperwork to get access to your paycheck, those delays can cause you to, lose your home and all kinds of stuff. And God forbid if you're in a relationship where there's no, no legal marriage or whatever. You saw, years, but she has no legal rights. When his estate was laid out, they gave everything to his kids. They said, we don't recognize you. We don't even know, we don't recognize the girlfriend. We don't recognize the ride or die. Yeah, you probably were a great girlfriend, but you're not a wife. A girlfriend is not a wife. And just like a boyfriend is not a husband. And so this is not me advocating or telling people to get married or not get married. But if you want to know some of the considerations that went through our mind when Alicia and I said, okay, do we want to just be a couple forever, which is a perfectly reasonable decision, or do we want to be husband and wife? Well, that part of that consideration plays out. When I'm old and sick and I'm in the hospital, I want my wife to be able to come and stand next to my bedside and make decisions on my behalf. And if something happened to her, God forbid, I want to be able to say, I'm her husband, let me in the hospital. And then also I want to be able to say to the attorneys, I'm her husband. I'll take it from here. Just let me, I'll take care of the assets. I'll make sure the kids get what they need. I'll make sure the household continues to run. So there's a reason why people do these things. Don't think that marriage and all that stuff is just only about love, or thinking somebody's cute, or the sex is good. No, it's deeper than that. It's a legal contract. It's an arrangement that you make to secure the legacy of the family empire that you're building. Your family is an institution. Institutions have to be legally secured. So you want to just kind of process that a little bit as you make your decisions going forward. Terrence is also asking, you mentioned in class a platform where you could buy your stocks. It's not limited to where you bought them. You own them outright. Is there a site I can go to where the shares I purchased other than Robinhood that they don't support the stock anymore? I think you can actually you can buy a lot of company stocks directly from the company. So if you want to buy Disney stock, you can literally look it up, how to buy Disney stock directly from Disney. And then there are other spaces where, where you're right. You don't actually have to go through these apps, or in order to buy the stock. Um, I honestly don't think it's that big of a deal because the fees are not that high. A lot of the apps now are doing commission-free trading anyway because Robinhood kind of helped reset the trend on that. So I wouldn't overthink it, but yeah, you can actually go directly to the company and get the stock and get the stock certificate and all that stuff if that's what you want to do. Renee is asking, how can we invest in the new Li-Fi technology? What companies and stock tickers do you suggest? Well, Li-Fi is this interesting technology. I guess it's a little bit like Wi-Fi, except you send the data through light signals. I guess the light spectrum allows you to send data, which is really interesting. I'm not sure how that's going to work out because, I mean, it almost sounds like it won't work if it's dark, but I'm sure they've thought that through. The companies that I was able to find on Li-Fi are companies like Pure Li-Fi, OLEDcom. Some of these companies are publicly traded, some of them are not. There's Velmini, VELMENNI, Firefly Li-Fi, Lucibel, General Electric is in the Li-Fi business apparently. So there are some companies out there that are publicly traded that will allow you to invest in the Li-Fi technology. I can't vouch for how good these companies are, but I do know that is an option, and there are some companies out there that are pretty big. Let me see. I'm trying to remember what the biggest Li-Fi company is. And when I looked up the growth trends on Li-Fi, they said that the market's valued at about $143 million in 2019, expected to reach $3.5 billion by 2025. They expect it to grow pretty rapidly. Let's see here. They're now sort of predicting trends and sort of analyzing this market, which means that there could be something there. I'm sure the stock prices have reflected some of this, but it may be something worth looking into. So maybe Li-Fi is your thing, and that might be something to look into. All right, so next question is Alicia P. Will you please say more about reverse splits like the one that just happened with GE? Yeah, okay, so a reverse split is like this, right? So think about it. Let's talk about what a stock split is, and then let's talk about a reverse split. So imagine you have a pizza, and you've got one whole pizza. Well, a stock split is where you take the pizza and you slice it into 8 slices, right? It's still the same size pizza. It's just that, now it's 8 little pieces as opposed to one big piece, but it's still the same size pizza. You've just rationed it out in different ways. And then you could slice it into 16 pieces if you want to, or even more, right? So that's a stock split. A reverse split is like, it's you can't do this with a pizza, but it's like sort of going backward. It's where you take a pizza that's sliced into 16 pieces, and maybe you reduce that to make it a pizza with 8 slices, or maybe a pizza with 4 slices, or maybe you just you glue it all back together and make it one big pizza. So effectively, when GE did a reverse stock split, it increased the stock price, but not because the company had a higher value, but because the company was chopped into fewer pieces. Shares of stock are basically slices of a pizza, where you're taking a big company, and this is one of the good things that actually comes out of Americanized capitalism, is that there's this ability to almost, to some extent, democratize ownership of companies by taking a big company and saying, okay, let's do group-based economics. Let's do Dr. Claude Anderson Powernomics, and have, instead of having a billion-dollar company built by one guy or one woman, we're going to actually break this up into 10,000 people who are all going to pour their money into a pot, and we're all going to give that money over to a group of people that are responsible for that money, and they're going to go and conquer the world with this. And they're going to come back, they're going to go out and become the hunters and the breadwinners and make all this money, and then they're going to bring it back, and we're going to split it because we all went into this venture together. So corporations and the public stock markets are the ultimate business partnership. It's no different from when my daughter got together with two of her friends, and they decided that they want to all make money together. So they all pulled together their resources. My daughter said, "I got some pretzels in the freezer that I can take out," and her friend said, "Oh, well, I've got some tie dyes. I know how to make tie dye." And then her other friend said, "I know how to make good lemonade." So they went to their moms, and they got all the money that they needed to get tie dyes, lemonades, and pretzels. And then they created the tie-dye lemonade pretzel company, where they then took so they all put in, let's say, a combined total of $100 or whatever. We all chipped in as parents, of course, because we love to see our kids have businesses. And these little girls went out on the block and and made, I think, about $450 in a day, right, at the age of 10. Right. So they, and I know grown-ups that they would have trouble making $450 in a day. These were 10-year-olds. And these were 10-year-olds who came together and pooled their resources. So if you want to know why, at the All Black National Convention, for example, we are so focused on getting you to come together as groups. If you want to know why we're so focused on helping you to get the tools on how to have healthy relationships with other people so you can get together as groups. If you want to know why, at the convention and online as well, we've been talking extensively about helping you overcome your own limitations and your traumas and things like that so that you can work together as groups. It is because communities that are better able to form healthy groups tend to be the wealthiest communities. Like, imagine what would happen at Apple Computer, if all the employees in Apple just started fighting each other all the time, if they were traumatizing and triggering each other. Hey, MF, man, you ain't nothing. No, you ain't, man. You tripping, dog. I'm gonna kick you in your ass. You step tripping, fool. I'm gonna get it up, right? Imagine if you had that kind of behavior in Apple, and everybody was on some old gangster stuff. Imagine if everybody was doing what, that gender war where the men and the women hate each other. The men are like, well, I ain't trying to be no sip and marry no baby's mama, and the women are like, these men are predatory. They're toxic masculinity, right? You see all that fighting going on, that whole civil war. Imagine if that was happening inside of Apple. If that were to happen inside Apple, Apple would lose $1 trillion overnight, because you can't make money when you're fighting all the time. You only make money when you are able to overcome your differences and find a way to work together, just like those 3 little girls I just told you about. They were able to get along well enough to form a corporation, basically, where they pulled together their resources and operated as a group, and were able to go out and make far more money as a group than they could have ever made as individuals. And so when I'm coaching my little daughter, this is important. I want y'all to understand big business models that trust me. I hope you trust me on this. Again, because finance is my thing. I've taught college. I've taught at the absolute highest levels. But it's best to explain this by telling you exactly how I coach my 10-year-old daughter. I coached her by saying, when you get into a group, your goal is to overcome your differences and to add value to the group. You add value to the group, you show loyalty to the group, and you say, how can I make sure that the group is good? It's not about you as the individual. The group is more important than the individual. This is the reason I impose these ideas on my child, is because I explained to her that that's why China is one of the greatest economic powers on the earth. It's because they operate as a group. That's why America is starting to lose, because we don't operate as a group. We're a bunch of individuals who believe that we're always right and we're always fighting each other. So that civil war is going to erode the economic power of America, whereas China is actually on the rise, right? So forming groups. It's not just investment clubs. It's not just, three little girls starting a business. It's not just Apple. I'm talking about your family. Your family is probably the most important group you'll ever have. So when I'm talking to my wife and my kids, I'm always thinking, how do we function as a group in a way where we're going to have peace and support and add value to each other's lives, so that we can go out here and do great things together and everybody prospers. Okay. So everybody type the word group in the chat if you get what I'm saying. I took my time to make this point, because a lot of the economic lessons that you think are complex are really not that complex. It really comes down to the simple ideas. Can you operate in a way where you're adding value to the lives of other people, where they will want you around, and then choose good people to share that value with, so that you can get together and do great things together? That's literally one of the key focuses at the All Black National Convention this year, which actually is going to happen at the end of October in Orlando. And if you want to, actually, we don't have the tickets on sale yet. They'll be on sale this week. But if you want to just reserve your hotel, we have a massive discount on the hotels. You can actually go to abnchotel.com. If somebody could type that in, I'd appreciate it. It's abnchotel.com. ABNC stands for All Black National Convention. abnchotel.com. Okay, guys, let me keep going. All right, so next question is, let's see. Renee Jackson is asking about Ethereum. She says that there was a fork on August 5th. Yes, there was. It was called the London fork. Let's see. How has Ethereum's fork and upgrade affected Ethereum? Is it good or bad? Well, Renee, I'm going to just say this. I own a lot of Ethereum, and my Ethereum has been shooting through the roof. Ethereum is the one of the top two cryptos that all of my crypto experts that I consult with are telling me to dive into and pump my money into that. So I pumped a ton of money into Ethereum. I pumped a ton of money into Bitcoin, and I haven't regretted it yet. And this fork has really shot the price of Ethereum up. And so we'll see what the long-term implications are, but so far, so good. Doc Grant, good morning, Doc. My question is, what does it mean when I hear the term short squeeze? Is that like buying a put option? No, a short squeeze is basically when you have one group squeezing another, where basically you have these short sellers who decide, hey, I think this stock is overvalued. So what they'll do is they'll go borrow shares of the stock so they can go sell it. Remember, in investing, every buy has to be matched with a sell. Every sell must be matched with a buy. It's just like how every baby has to have a mommy and a daddy, right? And that doesn't mean the mommy's more important than the daddy, or the daddy's more important than the mommy, but you need a mommy and a daddy to make a baby. That's just a fact, right? It's funny. We live in a crazy world. Some people think it's homophobic to say that, but I'm sorry. I'm sticking. That's the fact. I'm sticking with it. I'm sticking with the truth. So basically, the same way every child needs a mommy and a daddy, every trade needs a buyer and a seller. Right? Every transaction, there must be a point where you buy and a point where you sell. Well, there's no rule saying that you have to buy before you sell, right? A lot of times you can actually sell before you buy. So how do you sell a stock that you don't own? Well, what short sellers do is they'll say, I think that this stock is going to go down in value. And remember, in investing, your goal is to buy low, sell high. If you're able to buy things at a one price, say $5, and sell them for 10, you can become a billionaire just from that simple idea, right? And so basically what they might do is they say, I think I'm going to buy this or sell this stock now at, say, 10. I believe it's going to go down to 5 or 6 or whatever. And then I'm going to buy it back when the price goes down. So effectively, the short sellers go borrow shares of stock from the broker. They sell it on the market at a certain price. And then they sit back and they pray to Jesus that the price goes down. And then actually, sometimes they do more than pray to Jesus. Sometimes they actually go out and actively manipulate the price. Maybe if it can go on TV, they'll go out and say terrible things about the company, or maybe they will even spread rumors. Rumors is an age-old, tried and true way of reducing the value of an asset, right? It's not just something that might be done. So, for example, Jim Cramer was confessing. He's a famous investor. He was confessing that how they would go and just kind of tell the media that, well, we heard that Disney isn't going to make their earnings numbers. And then when that word gets out, it pushes the price down. So that is well, I would consider that to be a little bit of market manipulation, but legally it's not defined as market manipulation. But I think that that would be market manipulation, and that does occur. But then also, you might have seen other examples of this where the value of a brand is reduced through rumors and innuendo, right? Like think about it in the eighth grade. If there's some, if there's some girl who's jealous because another girl took her boyfriend, well, what might she do? She might go out and say, I heard that girl ain't nothing but a hoe, right? I heard that she slept with the whole football team, right? Well, we know that that's not true. She's really jealous, but maybe she does it in order to reduce the value of her brand, right? She's pushing down the value of an asset. So rumors and innuendo, or just even false beliefs can actually move the value of an asset. And so effectively, that's kind of how the game gets played on the stock market too. Well, the thing is that sometimes you have people that fight back. You have people that do what they call the short squeeze. So they say, look, we're tired of you short selling these stocks and then pushing the prices down. So we're going to do the opposite. We're going to push the price up. So on the Wall Street Bets, the Reddit forum, what they'll do is they'll go and get a whole army of Redditors, and they like with AMC, they call themselves AMC apes and stuff like that, and they'll just buy. If they see that there's a lot of short selling of a stock, they will squeeze the short seller by pushing the price up. So now instead of doing what you want to do to make money, which is buy low, sell high, they're forcing them to buy high, sell low, right? And that's a terrible feeling, right? So effectively, the short squeeze pushes the price up, and then as they're trying to cover their short sale, right? They're like, oh my God, the price is going up. I got to buy it back. I got to cut my losses. Well, that's pushing the price up higher because more buying demand continues to push the price up higher. And then there's also something that I won't go into called the gamma squeeze, where gamma is it's a technical that if you go to my options class, optionsinvestingmasterclass.com, I explain what gamma is. I don't want to explain today because it might confuse those of you who haven't, heard of the concept. But the gamma squeeze can kick in, which can make things even worse. So that's kind of what a short squeeze is. It's kind of like a civil war amongst investors where one group is trying to push the price up, the other group is trying to push the price down. And at the end of the day, they're all trying to screw each other. And that's what it is. All right. And by the way, if you some of you are asking, how do you get the recordings of these classes and lectures and stuff like that, just log in at the blackstockmarketprogram.com, the blackstockmarketprogram.com. Those of you who aren't in the class yet, the first month is free, and you get access to every single lecture that we've done like this, and you get access to 5 years of curricula on everything you want to know about investing, so you can bring your whole family if you want to. And then also every single week I put a list of what Dr. Boyce is buying, so you literally can look at the stocks that I like, and I will never ever mention a stock to you that I myself would not be willing to buy. Some of them I can't buy right away just because my capital is already deployed, but there are so many stocks where it's almost like eating food, where you ate a pizza already, but you're like, God, those cheeseburgers are really good. I wish I could eat the cheeseburger, but I'm too full. Well, sometimes as an investor, your money's all allocated, but these are all stocks that, based on my research, are companies that look like they have solid potential. But also remember this: when you buy a stock, one of the things you want to avoid is the bad habit of becoming short-sighted as an investor. Investors, one thing good investors have in common is they have patience, the ability to delay gratification. So a lot of times, if you buy a stock and you hear that it's a good stock, some people will come back and they'll say something that doesn't make any sense. Like they'll say, God, I bought this stock 4 months ago and it hasn't moved. Or someone, Kathy Wood, said it's a great investment, but the company, I bought the shares at 50 and the price dropped to 42. Well, if you talk to a Kathy Wood, if you tell her, if you say, Kathy, you bought the stock at 50 and the price is now down to 42, what's going on? You must be wrong. You know what Kathy's going to say? Kathy's going to just smile, and she's going to say, I still believe in this company. I believe that this company is going to be one of the great behemoths in this emerging industry in the year 2027. Like, she's literally looking 7, 8, 9, 10 years down the road. She's not talking about what's going to happen by next Tuesday. She doesn't give a damn about October of 2021. So if you hold the stock for 60 days, and that's the thing that, we kind of have a little bit of a gambling culture that's emerging within investing. This idea that a pick was a bad pick because the stock didn't go up in a 3-month period is completely the wrong way to look at investing. Investing is where you plant a seed and you give your seed time to grow. So a lot of the companies that I mean, if you really sure, some of you have made money in the last 6 months, in the last week, the last year. Some of you made money today. Congratulations on all of that. But the people who really made money in this group, I mean, the people that are really, really smiling right now the most are the people who bought stocks back in 2014 and have been holding those assets up until today. Those are the people that are really sitting on pretty, because those are the ones who can say, yeah, oh, you know that company that cost $3,242 a share? Oh, I bought it when it was, $200. Like those are the people that you want to be, and you will become those people, but you got to be patient. Don't get caught up in the gambling culture, because you're going to miss a lot of opportunities that way. That's not how Warren Buffett, became worth $100 billion. All right, so let me keep going. All right, so the James Keller says, is it wise to make a loan against my stocks to purchase additional stocks? If yes, what's the procedure? Well, one thing you can do is, a lot of companies have margin. They allow you to buy stocks on margin, and you have to apply for a margin account. I know E-Trade has it, Robinhood has it, stuff like that. And margin pretty much just means that, they'll say something like, okay, if you want to buy this stock, and it costs you $1,000, you got to put up $500. We'll put up the rest. Now, the problem with margin, though, is that margin creates leverage. Leverage is basically, that's another word for debt, or one of the ways to describe debt. Not all leverage is debt, but all debt is leverage, if that makes any sense. So basically, what does that mean? Well, what that means, leverage is like a seesaw, right? A seesaw means, if you think about a seesaw that's really big, has a big pendulum in the middle, and it's a gigantic, 50-foot long seesaw. Well, that means that, either you're way, way up, or you're way, way down. When it goes up, you're super high. When it goes down, you're super low. Leverage and margin kind of creates that effect. Basically, the deal they're making with you is, they're like, look, we'll loan you money, but we're not trying to gamble with you. You want to gamble on this stock, good for you. We're not going to gamble. We want our money back, right? So like, they're like Joe Pesci in Goodfellas. Remember, he said, "F you, pay me." Right? And you come with excuses and you explain, "F you, pay me." Well, this happened and that happened, and the stock, I thought it was going to go up, but it went, no, "F you, pay me." So give me my money, period, right? So that's kind of how they treat margin. So effectively, what they say to you is, look, all the profits are yours, all the losses are yours. All we want is our interest, right? So that means that if you buy a stock, let's say you put up 500 and the stock costs, 1,000, you buy $1,000 worth of stock. So 500 is a loan, 500 is the money that you put up. So let's say the stock price, or the value of that $1,000 investment, drops by $300. Well, the value of their stake is still going to be $500 plus interest. They don't care if your stock went to zero. You still owe them 500 plus interest. Your stake has dropped in value from 500 to 300 because the price went down by $200. That $200 loss is all yours. You're eating all of that. On the flip side, if it goes up, well, the gain is all yours. And that's what makes leverage tempting, is that it can actually propel you economically in certain ways. Debt is not a bad thing. Dave Ramsey has spoken about debt almost like it's universally a bad thing. That's one area where I disagree vehemently, if that's still his position, because I think debt can be a wonderful thing if you use it responsibly. Okay. So borrowing, money to buy stock, if you do it, I suggest looking into stable companies, stable investments. If you're going out there to sort of roll the dice, just make sure you know what it is. Make sure you're prepared for the worst, because what happens is that when the price drops below a certain amount, you get what is called a margin call. That's where the bank basically says, look, your stock keeps dropping. We're worried that you're going to default. So if you want to keep this position, if you want to keep this investment going, just understand, we are not your ride or die. We are not going to ride with you until the wheels fall off. You need to put up more cash to protect your position. If you do not put up more cash to protect your position, we are going to force you to sell. So a lot of times when the market drops, part of the reason that the market continues to plummet is because there are all these people who borrowed stock on margin. They all got margin calls, and they didn't have the cash, and they all had to sell. That's the danger. That's what you want to be careful about. Okay. All right. So Sean Brown, Dr. Boyce, what is the period of time that's considered to be earnings season? Give the exact period of time for each quarter. Yes. Okay. So earnings season is basically a time where a lot of companies release their earnings announcements. That's an important time, because when earnings are announced, that's what's going to drive market changes. And effectively what's occurred is, throughout the quarter, analysts have put together an expectation of what they think each of these companies will earn. And then when earnings season happens, It's really kind of like this thing where it's like, okay, let's compare what they really made to what we thought they were going to make. If you exceed that amount, then typically the stock price is rewarded. If you don't exceed that amount, if you come up short, then we might beat down your stock price a little bit, depending on how you explain away what's been going on. So typically, earnings season is in the first 1 or 2 weeks after the last month of the quarter, right? So the end of the quarter typically is March, June, September, and December. So in the first couple of weeks after the last month of the quarter, then you tend to have a lot of companies announcing their earnings. But not every company announces their earnings during the heavy earnings season. Every week there are companies that announce earnings, and you can actually find that if you follow, different financial publications. Whether it's the Wall Street Journal, CNBC, Yahoo Finance. What are some others? There's Bloomberg. There's a lot of things out there, and so they'll kind of tell you what's going on with earnings season. All right, so let me see here. So everybody who is listening online, I'm going to have to shut this off. But if you want to join us and you want to hear every archive recording of every conversation we've had, you can go to the blackstockmarketprogram.com. The URL's on the screen. The first month is free. Also, tomorrow, I want to remind everybody that we also do the Dr. Boyce Book Club every Wednesday. I decided to put that together because because I realized that we really need to sort of sit back and really analyze Dr. Claude Anderson's work. And so what we've been doing is going through a book called Black Labor, White Wealth, which helps you understand the origins of what happened in America and why Black wealth is so low, and what strategies were used to extract wealth from the Black community, and what strategies will work to help Black folks regain wealth. This is an important conversation even this week because the Wall Street Journal, I've mentioned this to you guys, they announced something that we've been talking about on this platform for a really long time. I've been explaining to you guys, that I noticed in my years as a college professor on different campuses that student loans were actually killing Black wealth. They go into college. The thing that we thought was making our wealth stronger was actually making our wealth weaker. Not because college is bad, but it's because the debt level was so high that you need to make an extraordinary amount of money to pay off that debt. And I knew this, right? When I graduated from school, I had over $250,000 in student loan debt, and I was making good money. I was making $115,000 a year at Syracuse University. But when I sat down and calculated how many years it would take for me to repay that debt, I said, this can't work. So what I did was I said, let me find ways to accelerate my income. That was when I had to tap into other skills that I did not pick up in college. And I think that I really don't know if this is deliberate or not, but they don't sort of tend to focus on those skills because universities are designed not to produce business owners. They're designed to produce employees. That's why Howard University and Yale University and a lot of these universities and University of Texas, that's why corporations make big donations to these institutions, is because they're basically saying, we'll give you donations if you give us employees. Well, unfortunately, in America, the way the economic landscape has shifted, employees don't make enough money to repay that big boy, big girl debt that you're taking on in college. So what's effectively happened is that Black people in 1989, Black college graduates were wealthier in real dollar terms, far wealthier in 1989 than you are right now. I want you to think about that, right? A generation ago, you look at your parents and you're thinking you're supposed to be doing better than your parents. You're not. Your wealth has been zipping. You've been hustling backwards in every single way, and then also half of all Black college graduates default on their student loans. So this is not. These are not just typical Black people. These are your talented 10th, right? It's like the Lakers finding out that every time LeBron James gets the ball, he's putting the ball in the other basket, right? So your most prolific scorer is scoring points for the other team. So a lot of these strategies are just not working. So effectively, if you want to join the book club, write down this URL. Somebody please type this in. You can go to blackkeystogreatness.com. That's blackkeystogreatness.com. I've arranged it where if you come live, you can join for free. You don't have to pay a nickel, and you get free access to my life class, which I think is pretty good because I think that there are strategies to being successful, strategies to being a winner. There are philosophies that I live by on a daily basis that have helped me to excel in a lot of areas in my life. So what I did was I did this mostly for young people, but I'm really doing it for anybody that wants to listen. I documented everything that I do that allows me to get an edge up on other people, that's helped me to become, a successful person. I can literally say that everything I ever wanted to accomplish in my life, I'm not kidding, I'm not making this up, I literally did everything I wanted to do. I don't have any regrets. I don't look back and say, oh God, if I had worked harder, I could have done it. No, I did all that. Right. So blackkeystogreatness.com, that gives you access to the life class, and you get free access to the book club. Now, if you want archived content for the book club, you can go to the drboycebookclub.com. That's where all the lectures are stored. That's not free. That's not free because we have to generate revenue somehow in the Black Business School, because we're trying to build a Black-owned university. That's what we're doing. So we can't do everything for free, but there's a reasonable fee and a money-back guarantee. And literally every single lecture that we do in the book club is archived in the drboycebookclub.com, and you can feel free to join that. That's something that we're doing. So right now we're on about page 45 of Black Labor, White Wealth, and we're talking about the keys to economic power, how to extract that, and how to move forward as a community on that. Okay, so feel free to join us. We meet every Wednesday night at 8:30 p.m. Eastern. Okay, so the